The YWCA, Fort Worth and Tarrant County transforms the lives of women, children, and their families from poverty to independence through housing stability, affordable high-quality childcare, and financial self-sufficiency. If you live in the Tarrant County, Texas area and would like to contact us, please give us a call at 817-332-6191. And for free financial coaching, please email us at moneycoach@ywcafortworth.org. Our next section is going to focus on banking and savings plans. Throughout this section, keep an eye out for our key concepts of knowing the different types of financial institutions, identifying keys to setting up a savings plan, knowing methods for managing your accounts, demonstrating how to pick the best option for your needs, understanding interest rate and how it impacts your savings options, as well as how to identify predatory lending practices. When it comes to banking, you can pretty much classify them into two different types. One is your typical commercial bank, and the other is a credit union. A commercial bank will make a profit off of your money by charging interest on loans that it doles out. Generally, they offer perks and benefits such as a wide variety of locations and products. Credit unions are just like a commercial bank, only instead of being owned by stockholders, they're owned by their members. Historically, they have better interest rates on loans and savings accounts. Now, on the opposite side of that, they're also a lot less widespread and a lot less known. Whichever one you choose to use as far as a banking institution, make sure that they're either FDIC or NCUA insured. FDIC are what commercial banks use to insure your money in case of a business failure. The same is said for NCUA for credit unions. When it comes to selecting a financial institution for banking, please consider the following items. First of all, you need to know your current financial situation and limitations. Certain banks or credit unions might charge a typical amount of money in order to open a savings account or checking account. Make sure that that fits within your current budget. Make sure that your interest rates on account requirements fit your needs. If you need a higher interest rate or a lower interest rate for a loan, make sure you're choosing the right place. Identify if there are services available with your banking history. Sometimes, if you've made some mistakes in the past, you might need to go to a banking institution that has second chance accounts. And lastly, you need to understand what benefits are being offered and what you have to do in order to get them. Sometimes those benefits come at a cost. Make sure you can afford it. Once you've established the institution that you'd like to start banking at, you'll usually open up either a checking or a savings account. Probably both. In order to manage those accounts, here's a few key things that you can use. First, there's online banking. See if your institution offers free online banking. This allows for instant access to your accounts. You can actually pick accounts which you can view and which ones you can't view, which might help you with your savings plan. You can also look at your monthly statements online anytime and pay bills or make deposits digitally. You can combine this with in-person banking at many of the locations that are located in your area. To maintain records of your banking transactions manually, you can keep it in your check ledger or in a journal. You can view paper and mailed statements and have hard copies. And you can also write physical checks. A lot of times people will use a combination of both of these in order to successfully manage their money. One of the main reasons that people like to open a savings account is not only just to store money securely, but also to make money with their money they're putting into savings. Savings accounts typically earn interest. The interest rate that you get on your savings account is going to determine how fast it grows. Make sure that you're looking at different account options and choosing the best interest rate for yourself. Now, the highest interest rate does not always mean that it's the best account. Be sure to look at the terms and conditions required for maintaining that account. Usually, the more money that you promise to leave into your account, the higher the interest rate will be. But when you need access to the money, can you get it? Keep in mind that most financial institutions are FDIC or NCUA insured, and that savings is really the main source that you can use to protect yourself from any predatory lenders. The more you have in savings, the less you would have to borrow from somebody that was going to charge you really high interest rates on loans. We'll talk more about that in just a second. When we talk about identifying predatory lenders, it's pretty hard to give you a set dollar or percentage value to look and indicate that something is a little bit predatory. But there are practices that you can identify using common sense. First of all, lenders that have a really high interest rate on their loans are probably looking to get more money from you than they're willing to lend you. Make sure that if they indicate that the payments on a loan will vary over the course of time, or if they say the term variable rate, you're very careful about it, because that means that the payments that you're making will change and most likely increase towards the longer the time you have the loan. If they have large fees in order to access the money or are identified as a credit access business, chances are they're what we call a predatory lender. If they advertise no credit check or get paid today, most of these identifying marks of a predatory lender will be in the contract they have you sign. And speaking of contract, if it shows you a huge finance charge, make sure that you're willing to pay it before you sign it. Some of the predatory lenders have finance charges as high as 400% of the money you borrowed. To explain that, a finance charge is pretty much what the total amount that you'll have to pay back is, including interest and fees. Understand that total amount that is in the finance charges is the amount you will have to pay once you sign the dotted line. It is a legal contract, and you are obligated to fulfill the requirements of that contract. As I mentioned before, the best way to help avoid predatory lending is to have a savings set up for emergencies. When it comes to setting up savings for emergencies, you need to have a savings plan. Different people have different strategies that work for them, but the three key things that you need to consider in any savings plan are the following. First, make sure you pay your debts before you're able to save. You're not going to get very far if you're accumulating a lot of bad debt while you're saving money. Second, save consistently. Even if it's just a small amount of money, saving consistently will give you a good time frame for when you're able to accomplish your savings goal. And third, try to only use savings for the reason you set it aside for. If you had a specific purpose for it, it's not going to do you any favors to try and use it for something else. So plan ahead and only use it for the reason you set it up. Now, when I said that there's a lot of different strategies that work for different individuals, this is kind of what I was talking about. Do something that works for you, because the most important part of any savings plan is that it needs to work. Here's a few strategies that you might want to try out. First, you can have automatic deposits from your paycheck. Talk to your HR or payroll specialist about this at work and see if you can have a small amount set aside and sent directly into your savings account so that you never have to manage the money. Second, have automatic transfers from your checking to your savings account each month. If you can afford to do this, this might be a good option. Third, keep the change. Put any extra change that you have in your pocket at the end of the night into a piggy bank. You might be surprised how fast it adds up. Fourth, grocery savings. When it tells you how much you've saved at the end of your purchase at the grocery store, maybe you can take that amount and put it into your savings, since you already plan on spending it anyways. If you can think of other options, please make sure that you give them a try. The best way to save is what works for you. If you're currently maxed out in your budget, some of the things you can do in order to save is to change a couple of behaviors. Let's take a look at an example of how this might work, because a little can actually add up. Let's say that you buy a coffee each morning before you go on your way to work. It costs you about $2. So if you think about it, you spend $10 a week on coffee if you work a 5-day work week. If you brew it at home and take it with you, it only costs about 80 cents. So let's do the math. $2 minus 80 cents is $1.20. That's $1.20 a day that you could be saving. $1.20 times 5 days a week equals $6 a work week. Now if there's 4 work weeks in a month, that's $24 a month that you could simply put into saving just by bringing coffee instead of buying it. So a little behavior change can add up. If you look at it, $24 a month times 12 months is $288 a year that you can save simply by making your own. So think about that and how you can change those couple of small behaviors in order to save a whole lot more money. As we come to the end of this section on banking and savings, I want to review the key concepts we talked about. Do you know the different types of financial institutions and how to identify them? Can you identify the keys to setting up a savings plan? Do you know the methods for managing your accounts that we discussed in this video? Can you demonstrate how to pick the best option for your needs? Do you understand interest rates and how they apply to savings and loans? And also, and most importantly, can you identify predatory lending practices and avoid them? Make sure that you consider all of these items when you're setting up a banking and savings plan.